4.83%. The previous month we'd seen inflation of 4.85%. So there's a marginal decline only in the inflation reading for the month. Broadly because food prices, they've not really fallen as expected. In fact, if you look at the overall basket of food and beverages inflation has come in at 7.87%, marginally higher than what we saw in the previous month. Fruit prices have gone up, inflation there, although vegetable prices, very high inflation, but it has come down marginally month on month to about 27.80%. So those are the numbers on your screen for April inflation numbers that have come out. I'll quickly read out some of the key inflation numbers. Cereals and products, one of the key components in food. Here the inflation has inched up a little bit month on month to 8.63%. The meat and fish inflation has also risen to 8.17% for the month. Egg has gone up again, or gone down rather, compared to the previous month at 7.08%. Milk and products at 2.97%. Oils and fats continues to come down. We continue to reap those benefits from last year at minus 9.43%. Fruits inflation 5.22%. Vegetables remaining concerning and quite high, although lower month on month at 27.80%. Pulses and products at about 16.84%. Sugar and confectionery 5.94%, and so on. Moving on to some of the other inflation, clothing and footwear, that's come to about 2.85%. For the previous month, we had a similar number, 2.97%. Housing inflation, 2.68%. Compared to last month's 2.77%. So there's a marginal decline there as well. Food and light inflation, deceleration of minus 4.24%. And miscellaneous, which is largely your services inflation, that has come to 3.54% for the month. The consumer food price index, that stands at 8.70% for this month. It compares with about 8.52% that we saw in the month before. So those are the overall numbers, inflation for the month of April, along expected lines at an 11-month low, but not marginally, not very drastically different from the numbers that we saw the month before. And that is because the culprit remains food inflation. It continues to remain high. It has gone higher month on month, although in certain categories, the food inflation has come down. So let's quickly bring in our experts to analyze these numbers for us. Joining us now to take the discussion forward are Aditi Nair, Chief Economist at ICRA. Also with us is Sakshi Gupta, Vice President and Senior Economist at HDFC Bank, Devang Shah, Co-Head of Fixed Income at Axis AMC, and Madhavi Arora, Lead Economist at Emkay Global Financial Services. Ladies and gentlemen, thank you very much for your time here. Aditi, quick thoughts on the numbers. What was your estimate and how do you read some of the internals?
Sure, thank you. Our estimate was 5.8%. So this tiny dip which has come through is in line with what we had forecast. And I think most of the internals are also not surprising, except for one particular item, which is miscellaneous, the miscellaneous category. And there the month-on-month uptake is definitely higher than what we had penciled in. And it's much higher than the kind of numbers that we'd seen over the last few months. So I think this is something that we need to look at very carefully in the disaggregated numbers. More or less, most of the other items are fairly similar to what we had forecast, other than I think fuel and light, which is a little lower than what we had penciled in. And that's what has absorbed the higher than expected miscellaneous number.
Aditi, though, this miscellaneous number last month, the month before, we had a reading of 3.5% in March. In April, it is 3.54%. That is the number you're referring to, largely services?
Yeah, so the month-on-month uptick is much higher than what we've seen in the last few months. So we need to just look at the individual. Yeah.
All right, got that. Sakshi, quickly, your thoughts on this headline number at an 11-month low, but yet, food inflation that continues.
Don't use Midjourney. Use this new AI technology instead, which allows you to create unlimited designs in minutes for just a low one-time.
Story remains that you have pressures continuing on the food inflation side for one reason or the other. If you look at vegetables and fruits together, there I think price pressures continue to linger on. Pulses inflation print also for the month of April is higher compared to the previous month. So I think food continues to be a problem. Although I think what's encouraging, and I think some of the cushion that we are getting for inflation is coming from the fact that you are getting broadly digestible and softer or soft prints on core inflation as well as fuel and light inflation, where in fuel and light, you've seen a contraction and a continued contraction over the last couple of months. I think going forward on the food side, we are in the summer months right now. So there is a seasonal impact where vegetable prices tend to go up. You also have heat waves in certain parts of the country, which could lead to, further pressures. But I think this is, this is going to play out for the next 2 months. The good news is that as we move into the monsoon season and there is an expectation of an above normal monsoon, a lot of these price pressures should start cooling off. And you have a very high base from last year, which should help push down your headline inflation print. So overall, I think a very positive number compared to our expectations for this month.
Okay, as you rightly said, Sakshi, I mean, it's a typical summer phenomena, right? We see this acceleration in fruit and vegetable prices, which we continue to see even for the month of April. Madhavi, your quick thoughts on especially the internals. Food, of course, as expected, remains high, remains a spot of bother. Other than that, anything that stood out for you?
So I think, FY25 would be very similar to what you've seen in FY24, where there was considerable uncertainty with regard to food price outlook. I think going ahead as well, despite healthy progress in Rabi production, uneven seasonality in vegetable prices, along with the fact that, we are seeing climate shocks on a regular basis, would obviously warrant some careful monitoring. We saw that happening in FY24, and that would probably repeat in 25 as well. And obviously, RBI cannot do much to influence food price management, but obviously, this sort of puts pressure on them to stay vigilant on domestic dynamics with regard to food. I think, again, as I said, very similar to what you saw in 24, we will see sort of core inflation also behaving much lower or much, more docile compared to headline inflation. So I think what you saw in this print probably will continue in the coming months as well, where you will see a decent gap of roughly 70 to 90 bips between core and headline inflation on an average for the next year, very similar to what you saw last year. So I think that pretty similar territory is probably going to be repeated in FY25 as well.
Okay, we're still going through some of the numbers. Aditi, quickly, before I go to Devang, what is your core inflation number?
So I haven't got the exact, because we do core of core, so I haven't got that number yet. But broadly, in terms of direction,
we'll wait.
What Margaret just said.
All right, so we'll wait for that core inflation number. But Devang, quickly to you. No surprises really. This is widely along expected lines, even in the internals, pretty much as expected. How will the bond markets take this number?
So Ritu rightly said, I think probably it's on expected lines, and we were all expecting probably the headline CPI to be close to 4.85%. I think bond markets are looking at a couple of things. One, what is happening on the US CPI trajectory. We have the release in a couple of days, and I think all eyes will be on it. Second important thing, which is more to consider, is the domestic liquidity. The domestic banking liquidity has got a bit tightened in the last few days because of less of government spending. And the third more important point, I think the other panelists covered it. I think core inflation should be easy and should keep bond markets happy on the medium term. But from this inflation print, no surprises. I think all eyes on US CPI and the banking liquidity.
So at this point of time, Devang, is it the US CPI that will drive the bond prices more than this 4.83% April CPI number that we've got here?
Yeah, I think if you look across at RBI's projections on inflation, the next 9 months actually still remain quite on the lower side. And our bond markets have probably priced in an average of 4.5% of CPI for most part of this year. So I think there are no significant positive surprises from CPI. I think bond markets in India will be directionally driven by, one, what's happening on the US data points and how the US Treasury yields move. And secondly, as I told you, the banking liquidity has got recently a bit tight. We should look at it, how the banking liquidity ease up. Thirdly, I think another important point is next month onwards, we'll have the JP Morgan index flows to start flowing in. It's a 2 billion per month flow, which will be they will start looking to buy government bonds. I think once it starts, bond market should probably trend lower.
Yes, that is expected from June onwards in tranches. But Sakshi, quickly a word on the food inflation. This number that we've got at 7.87% food and beverages for, April. Will this spoil the picture as far as the monetary loosening cycle is concerned? Of course, next month, when the MPC meets, this is the last inflation number that they're going to go into the meeting with, apart from, of course, that big GDP number expected at the end of the month. But how does this materially move the needle at all for the MPC at this point?
Honestly, I don't think that this number materially moves the needle for the MPC. I think it just confirms the fact that there are risks that, that continue to linger on. There are a lot of uncertainties around the food inflation trajectory. As I mentioned, you have the impact of the heat waves. Some of this is going to play out in the next two prints. I think there are still headwinds from, the global side, the commodity cycle, which while commodity prices have cooled off a bit, I think that continues to.
Understanding low-level system design is extremely important in order to build scalable, robust apps. So how do interviewers test candidates on this skill? With case-based projects.
That we've got today, I don't think that the communication from the RBI is likely to change in the upcoming policy. I think they will continue to sound cautious on some of these risks on the food side, on the global side. And I think any decision or any hint towards loosening monetary policy is perhaps a discussion that they will have later in the year, once I think we have more sustained moderation, especially on the food inflation side.
Okay, Aditi, the problem with food inflation is that, it's not something RBI can directly manage with just interest rate moves. Do you think it takes away some of the freedom of the MPC to act, until this, of course, comes down on a sustainable basis?
Absolutely, Ritu, you're quite right. And the issue is what we've seen in the last several months in the Indian context is that our food inflation tends to be extremely variable and volatile. And that is something that throws a spanner in the works as far as monetary policy decision making is concerned. Of course, the issue is that if food inflation is high and expected to rise, is it going to seep into inflationary expectations? And then that definitely becomes something that the Monetary Policy Committee does need to address, even though monetary policy can't directly, of course, have an effect on food prices. So that is something that the committee will want to keep in mind. My sense is that next print for the headline inflation is going to again creep back above 5%. And with an adverse base, we're going to end up with a food inflation that is above 8% for the month of May. And then we're going to come back to a steady month in June and then have the reverse base effect really pulling down headline and food inflation for a couple of months. So again, we're in for lots of ups and downs and not a very clear trajectory. In the meantime, as Sakshi and Madhavi have been saying, all the other factors that affect the agricultural output are going to play out, the heat wave and then the monsoon. And possibly by the time we are in August, the MPC will have a lot more data in front of it in terms of what is going to influence the food inflation trajectory. So I see a very, very low case, very low probability of any material change in the tone or the stance of monetary policy in the June meeting. And possibly the August meeting is really where we could expect to see perhaps a stance change if everything kind of turns out well on the food inflation side and globally commodity prices and crude oil prices stay in control and geopolitics at least doesn't worsen from here on.
Yeah, Madhavi, your final thoughts on this matter before we close it. The last mile of disinflation, because of food inflation remaining high, and of course there is the threat of heat waves. We'll have to see how the monsoons play out. Do you think this last mile of disinflation is going to be a bit of a tough task ahead for the MPC?
I think that's going to be a problem across the world, not just India, right? I think the Reserve Bank is also watching global winds very carefully. Of course, food inflation remains a problem, but overall, I think Indian inflation is now, last 2 or 3 years has sort of behaved in a sub 6% zone. And I think this year also, despite the fact that we would see a lot of volatility in food prices, we would still end up, averaging somewhere close to 4.6, 4.7%, which is still a comfortable number for the Reserve Bank per se. But of course, looking at a sub 4% inflation on a sustainable basis, of course, require a much better food price management, which is going to be a problem for, as you go ahead. That said, of course, for the Reserve Bank, again, as I said, it's a problem that across the world you have seen central banks sort of fighting. At the same time, I think RBI's reaction function is also pretty much pegged to what's happening, in the Western world, specifically the US Fed, where they're now, we are seeing cracks in the global Goldilocks narrative sort of appearing. Now, Fed's rate cut hopes are becoming a moving goalpost again and again. And, that sort of is also leading to market expecting, maybe 1 or 2 rate cuts by the Fed in this year rather than 5 or 6 rate cuts that was being seen beginning of the year. We are of the view that, you are not going to be seeing any cuts from the Reserve Bank, which will basically be deriving from the fact that you are not going to be seeing any cuts from the US Fed this year. So it's going to be a difficult task for central banks across the world to really, get inflation, under control, and the last mile will be a problem for everyone around.
Okay, let me just quickly get everyone's estimates for the next, reading for CPI. After 4.83% in April, where do we go? Aditi, what is your internal estimate for May?
5.1 to 5.2%.
5.1 to 5.2%. Okay, Sakshi?
So we are closer to about 5 to 5.1% for the next month.
Okay, around that level. And Madhavi, are you also expecting a similar uptick, about
pretty much similar to
20 to 30 basis point?
Yeah, pretty much similar to Sakshi's number, around 5 to 5.1%.
Okay, so 5 to 5.1% seems to be the consensus, which means, RBI talking about getting to that 4% midpoint number on a sustainable basis, on a durable basis, before it really acts. We're some time away from that. Devang, just final thoughts on what the big takeaways for the bond markets are going to be and what you're going to be watching out for in terms of the next sort of triggers for any movement.
Yeah, so I think the panelist highlighted it rightly. I think RBI would not be in any kind of hurry to cut rates. Okay, we are actually, we focus a lot on CPI, but I'm sure when you spoke about in the beginning of the month, you will also have a GDP release. And the projections for growth this year, again, are significantly on the higher side. At a 7% kind of a growth trajectory, I don't see RBI to be aggressively cutting rates unless and until they get the 4% handle on inflation and the disinflationary pace is significantly fast or higher than expected. So our assessment is also similar, that probably, yes, we'll be first waiting for how the bond trajectory on global markets function, probably how the central banks globally start cutting rates. Once they start looking at cutting rates, and if we get any kind of growth shocks, then we're expecting more rate cuts from RBI. Otherwise,
क्या आप स्टॉक मार्केट में इन्वेस्ट करना चाहते हैं? तो आपको पता ही होगा, हजारों स्टॉक्स.
For the bond markets, I think the important aspects would be, one, how does the flow trickle down on the JP Morgan indices, because the demand supply dynamics for bond markets are very good this year. And secondly, I think how the US bond market yields function. So probably once they start trending lower, our bond markets will probably breach the 7% on the lower side.
Okay, we're still standing by for that core inflation number. If any of you have it, you can let us know. But, on that note, we have this number, 4.83% April CPI overall. We'll watch out for where the core is. But right now, the biggest concern has been the food inflation continuing to inch high. On that note, Aditi, Sakshi, Devang, Madhavi, thank you very much for joining us here and helping us analyze, the April CPI print that has just come in. Thank you very much for your thoughts here.
Should be punished. Necklace also asked Daniels if she was trying to extort Trump when she was shopping her story or